Good morning. It's your friendly neighborhood analyst Vijay here. It's Wednesday, 27th March 2024. What an exciting day it was yesterday. Most people believe that the markets will go up because it's the last 3 days of this financial year. That is because of NAV hunting. Now, the market had got its own mind and it did something else. And it tanked severely as far as the Nifty is concerned. Now, why do you think it happened? Based on my analysis, there was a buyer strike. Before I explain what buyer strike is, let me be very thankful to all of you. We are almost reaching 500 subscribers. Please like this, subscribe, and share this videos so that more people get to know about the channel. Since we are data driven and we are different from other channels because we don't impose our own thoughts onto the audience, and our audience is a very discerning audience. So, what is this buyer strike? People expect that the markets have to come down only if there is a lot of selling, but one does not realize that you don't need for the markets to come down just by selling as much as lack of buying. So that was what was visible globally, which is very, very strange because we can say at the local level, March is a liquidity tightening month. So what about global? Japan, for instance, had a volume which is one third of the daily average volume of last 3 months. Standard and Poor had just 50% of the daily average volume, and this has been going on for the last couple of days. So there is a worldwide liquidity crunch. More than liquidity crunch, I would say buyers have been exhausted, and when buyers get exhausted, the markets find their true levels, in this case, down. So that is why you noticed that even in the US, which opened very strongly, came down at the end. The same thing is happening in Asian countries also, and I expect that to happen even in India. So one should expect that volatility will remain, but the bias will be downside. Now, another interesting thing which we noticed yesterday was that the premium in the March series in the Nifty was about 90 points at one point of time. Typically, when the series is ending, just a couple of days before ending, the premium converges. The Nifty futures prices converge to the cash market prices. To see a 90-point premium is unheard of as far as I have seen in the last, say, 20, 25 years. Now, that is very, very surprising. And if you look at what analysts and market watchers are talking, they are thinking it is bullish. Actually, in my opinion and analysis, it is very bearish or very worrisome. Now, how will this premium come back to cash market? Either the cash market prices have to rise to the premium, Nifty futures prices, or the Nifty futures have to come down to the cash market prices. I could be wrong, but I believe that the futures premium will shrink. It has to shrink anyway because tomorrow is the last day of the settlement, and it will probably shrink and come towards the cash market prices. So that is what is a very, very interesting thing. And another interesting thing is that the May series will open. May series actually opened. The Nifty future premium is about 400 points to the cash market prices as of yesterday. 400 points is unheard of. Again, the premium between the next month, that is April series, will be approximately 100 to 150, and the following month, which is May series, will be about 200 points. Now here we are sitting with a 400 point premium, which is again unheard of, and I do not know what kind of speculation is going on because the the election results are in the June series. It is not in the May series. So there is heavy position buildup. The same heavy position buildup was there in March, which was, of course, the premium was not 400. What happened in March? The market never went anywhere. In fact, it came down from the highs. The highs it made in March was about 22,500. It came down significantly below that, and we are trading at 22,000. Many people think 22,000 will be held. It's possible it may be held, or it may break and come back to 22,000 by tomorrow because a lot of people have positions. But the fact that you see 22,000 is struggling, the market is struggling at 22,000 tells us a different story than what people tend to believe. So therefore, I would exercise enormous amount of caution to go ahead and buy at this point of time. If I'm a buyer, if for investment or for trading, that is a swing trading, I would like to look at it tomorrow in the second half of the session. I will tell you why tomorrow is going to be interesting. That will be tomorrow. Till then, take care, play safe, and have a very profitable trading day. Thank you for listening to me.